welcome to another class. Welcome to my channel again. Okay, today we'll be talking about market structure stroke trend. Market structure stroke trend, right? I've been getting a lot of DMs. I've been getting a lot of DMs concerning market structure. I should talk about market structure. So we'll be talking about market structure today. Just sit back and relax. Take your time and watch to understand every single details I'll be sharing concerning market structure, right? So if you're new to the channel, do well to subscribe and like, and then turn on your notification for more, right? If you find it interesting. So let's begin. I'll try to break it down to the point where you will get and understand every single details I'm about to share. Now let's talk about structure, market structure. All right. Market structure. Now, let's talk about the word structure first. Let's do a little practical. So when you hear the word structure, what comes to your mind? What do you understand by this word structure? You can pause the video and think for a moment, and then before you come back. All right, great. So what do you understand by the word structure? Now, think of something. Think about you having a brother. You have a brother, right? I believe you have a brother, you have family. Now think of one family in your house, someone that you see often, someone that you see often in your family. You know him, you know how he looks like. Now imagine someone print out an image, a sketch image of your brother or your sister or your mother or your dad. Somebody printed out and then showed you that. Do you have an idea who this is? Now, because your brother, you've been with your brother for a very long time, your mom, you're familiar with them. You know the shape of your brother. You know the shape of your brother's head. You know the shape of his shoulder. You understand? You can easily tell when you see your brother's shape or structure or anything, or your mom. Now, that image that has been printed out, the sketch image that has been printed out, looking at it, you can easily tell, even if you're not 100% sure, but you can easily tell that this structure or this image looks like my brother, right? Or this image looks like my mom, or this image looks like my dad, right? Now, think of that. Why am I saying this? When it comes to market structure, it's simply the way the market is being formed, the kind of structure the market gives you, right? What you see that will make you believe that this is market structure. Now, that image, let's assume the image represents your brother. You can easily tell that this image looks like my brother. I can see the structure of the ear, the shape of the ear, right? The head shape, shoulder shape. I can see all of this. It's looking exactly like my brother. I think this is my brother, right? Even if you're not 100% sure, but you still get that belief somehow, somewhere that this looks like my brother, right? So that's simply how the market structure is. The way the market is being formed, that shape that you see in the market that will make you believe that this is market structure, right? So the reason why I'm telling you this, don't take markets, when you hear the word market structure, don't take it as one big deal. It's simply telling you how the market structure looks like, right? This is one first step of understanding the market, which is market structure. So how does this market structure look like? Let's come back here. How does this market structure look like? So market structure move in a swing ways. When we talk about market structure, it's move in a swing ways. This is how it looks like. Market structure move in this form. Some people call it wave form. Some people call it step form. Some people call it swing movement, right? Now, when you see market in this way, it's simply telling you that this is what, when you see a structure this way, it's simply telling you that this is what market structure. This is what market structure looks like. So when they wake you up from sleep and then show you a structure like this, you can beat your chest and tell someone that this is market what structure. The same way you can recognize your brother's shoulder, you can recognize your brother's head, you can recognize the ear, you can recognize the lips, and you can easily tell that this is my brother's structure. Now, the same way you want to recognize that market structure move in this form for you to know that this is what market structure. So like I said, it move what? It move what? In a swing ways. This is how it moves. So when you see market moving this way, it's giving you movement to what? To the upside. When you see market moving this way, it's simply moving to the upside. It's giving you a structure to the upside. We also have it in this way. Swing ways to what? To the downside. When you see market moving this way, it's giving you movement to the downside. It's swinging to the downside, right? We also have market in this way. Also, when you see market moving this way, it's moving what? Just sideways, right? This is a market structure. This is a market structure, and this is a market structure. Now, for market structure, when the price move from here to this point, this is called a swing high. This level is called swing high. Because the market swing from this point to this level before dropping lower, here becomes what? A swing high. Now, this point becomes what? You can guess it. This point becomes what? Swing low. Because markets move after swinging to this point, it decides to drop lower to this level. Now, from this point that the market start moving up, becomes what? The swing low. So what I'm trying to let you know is that all of these levels, all of these highs becomes what is called swing high. All of these highs is called what? Swing high. Right, this low here is the swing low level. This is a swing low level, it's in the swing high level. So market is swinging toward to the upside. The same way when the market is swinging to the downside, you have your swing low to the downside, and then you have your swing high to this side. The next move is what? A swing low to the downside. And then you have swing high. Now, when price keep doing this, it's simply telling you that the market is doing what? Swinging to the what? To the downside. Market structure is moving to the downside. Market structure is moving to the upside. Any name you want to call it to understand, as long as you get points, you are good. Right? So, with that being said, let's give a meaning of this market structure. Now, you might as well jot this down because you need to know it. This is it right here. This is the meaning. Market structure is the way the market is being formed and moved in form of trend. This is what I just explained right here. Now, let's talk about trend. Let's talk about trend because this definition here says market structure is the way the market is being formed and moved in form of trend. So what is now trend? Let's talk about trend. Now, again, before I talk about this, let's have a little discussion again. Let's have a little discussion. Now, take a moment to think about something. What trend? What is that thing that trend in this country or in the world that a lot of people that would take a lot of people's attention or people's mindset towards that direction? Think about something. Is it music? Okay, let's talk about music. Now imagine in one of the celebrities you know, one of maybe your favorite celebrity, which is other people's favorite celebrity too. Now imagine he or she releases a song and the song is nice. What happens to that music? It starts trending. A lot of people start listening. A lot of people start liking the song. A lot of people start downloading on their phone. A lot of people start streaming it. It takes a lot of people's attention. It gets their attention. They want to listen to it. They want to enjoy the vibe. They want to dance to it. Now, what happens to that music? Now, over time, you realize that that music will start trending, and the music will start doing what? A lot of people will start listening. A lot of people will start enjoying that music. Now, for people to start doing that, that music will now move where they listed the top 1 to top 100 music. That music can move from top 100 to top 1, right? The music can move to top 1. Why is it moving to top 1? Because a lot of people are listening to that music. Because a lot of people are listening to the music, that music has now pushed to top 1. Are you getting that? Now, for that music to move to top 1, it's simply telling you that people are loving and people are streaming and people are listening to that word, to that music. They are dancing to it. Now, over time, what will happen to that music that is that your favorite celebrity's music that is currently at the top 1? Now, over time, you realize that the music will start dropping. Over time, you realize that that music that is currently at top 1 will start dropping from top 1 to top 2, from top 2 to top 5, from top 5 to top 10, and then eventually drop down. So why is that? Because a lot of people are streamed and enjoy this music. That time is trending, is what elevated this music to this point. Now, because the music is now being listened multiple times, and even you're tired of listening to that music. You want a new music. You want that your favorite celebrity to release another music. You start listening to other music. You start taking your attention away from that music. The same way your attention is being taken away, other people streaming the music, their attention will do what? It will be taken away from them too. Because of that, the music will start dropping, right? It will start dropping. Why am I saying this? It's simply just letting you know how trend works. Now, in market structure, when a market is trending, it trends for a period of time. It may be 2 months, it may be 1 month, it may be 1 week, it trends for a period of time. After that time, it will start trending to the opposite direction. If it trends this way, if it trends to the upside, after a period of time, it will start trending downward, right? That's simply how trend is. Now, in trend, we have 3 types, 3 ways the market trend. Let me use that word. We have 3 ways the market would trend. Well, let me be honest with you guys. A lot of us were taught that market trend in 3 ways, right? But basically, market trend in 2 ways. If you think about it, I'll explain. It's either the market is trending upward or is trending downward. Any other thing aside from market trending upward or trending downward is not trend, right? It's just a temporal pausing phase at that moment. It's either it's pausing phase to gather momentum to do what? To trend upward or to trend downward. Now, because a lot of us have been told or we are taught or we were taught about the three types of trend, we still want to do it, follow that way. But just know that we have two major types of trend. It's either it's trending upward or it's trending what? Downward. We have uptrend, we have downtrend, we have ranging trend. They are all under trend. Now, what is an uptrend? I hope you guys can see this, right? So an uptrend is the move higher in price created by higher high and higher low. A downtrend is what? Is the move lower in price created by lower low and lower high. A ranging trend is when the price is moving back and forth between a higher price and a lower price. Now, this is just the definition. Now, let's go further. Let's explain. Now, we said an uptrend is when the price is moving higher in price, created by higher highs and higher lows. Now, when the market is going up, when the market structure is moving upward, when it's giving you a swing to the the upper direction, it start trending upward. It start giving you series of what? Higher high, higher low, higher high, higher low, higher high, higher low, and price keep giving you this move. When a price keep giving you this move, it's simply trending upward. When the price keep giving you this, it's simply doing what? Trending upward. The structure is simply going upward. All you have to do is look for opportunity to continue the trend upward. Look for opportunity to buy to enable you make money as others are making money. Right? So here becomes what? The higher high. All these levels are what? Higher highs, because this is what price always creates when price is going up. Higher highs. When price is going up, it continue creating higher highs and what? Higher lows. When price move to this point, at this point of rejection becomes what? The newly created higher high. Now, price drop lower to this point. At this point where price drop lower, start moving up, it's newly created what? A higher low price. From here, we created another higher high. From here, we have another higher low being created. From here, price push to create another higher high. From here, price drop lower, create another higher low. When price keep doing this, it's simply telling you that this market is trending upward. All you want to do is find an opportunity to get in at the higher low price. This higher low price becomes your the level you're looking to buy from. Now, a lot of people, some persons might be asking me, where do I come in from? Where do I buy when this market is trending? This is simply where you buy from, the higher low price. You're buying from these levels. These are the levels you buy from. You target. Now, the next question is, where do I target? Now, you can target the previous high. When you get in right here, the price come lower to give you a higher low, and then it's ready to move with a confirmation. You get in, target the previous high. Now, why are you targeting this previous high? Because price is going to take it to do what? To form another high. Now, price is going to take it to form another high. So it is better price close you out in profit and then form another high, right? and then to do what? To now form another opportunity for you to get in again. You getting in, still target the previous high. Now, in trading, you always want to do what? To balance your emotions. When we mean balance your emotion, you always want to make sure you take a realistic trade, a trade that you know that once it gets to a level, it takes you out in that profit, and then you're done for that day, or you're done with that trade. You move on to the next, than you extending your take profit to where you believe it's going to get to, and eventually price do not get there, right? So if you know the area you're targeting as as the level you want to take your reward, it makes the work a bit easier for you, right? So how do you know that? Knowing fully well that when the price is trending upward, it creates a new high, form another new low to create another new high. All you have to do is when you get in at the level like this, you're targeting the previous high. Are we following? Now, the next thing I want to tell you again is this about these lows. These higher highs, there are rules here, and the higher lows, there are rules here too. Now, when price start giving you these higher lows to push the market up, price number one rules is when a price is coming back to give you a higher low, it's not supposed to take them, right? Why? Because this is simply where your stop loss, this is simply where your order and your stop loss is. So if your order is here, you're placing your buy here and your stop loss below. So you don't expect price to come and take it, because if price takes it, you're out in loss. So that's number one rule. Price, when the price is trending upward, price is not meant to do what? Take these major lows. Price is simply is supposed to come and do what? Bounce on this level by creating a new higher low right here, another order for people to step in and then push the market upward. Now, the number two rules is this: price is meant to take the highs for a buying trend to enable it form another high. Please pay attention to this. When a price is trending upward, it is not supposed to take the lows, because these are areas where your orders are, and your what, and your stop loss. Now, when a market is trending upward, it is meant to do what? To take the previous high in order to form a new high. A new high has been formed right here, and price formed a new low. The next move is meant to take this high, close above it, and then form a new high. That's the number two rule. If you can follow these simple rules, you're making the work easier for you, right? You're making the work easier for you. Now, let's proceed further. Now, in a case, okay, before I explain that, whenever price take this previous high to form another high, automatically we have what they call break of market structure, BOS. It's called BOS. It is called what? BOS. Break of structure. Now, when price do what again? Drop lower to this, when price drop lower to this point and then push higher again to take out this previous high to form another high, automatically we call this level another break of structure, another BOS. So when market keep doing this, you keep having break of structure to the upside. Break of structure. Now, if price is been respecting these two rules, not taking this low, taking this high to form another high, not taking this previous low, but rather taking this previous high to form another high. But now, in a case where price get to this level and then fail to do what? To create a higher low at this point and drop massively, taking out this particular low, this particular higher low that price is not meant to take. Now, price taking this low, you're supposed to get in from here again to target here, but what happened? Price, no, there was no confirmation when price got here. The next thing, you see a massive drop, a significant drop, taking this low out. Now, at this point, you can call it trend violation. This uptrend has been violated. The rules has been what? Has been disrespected. Now, at this point, something is about to happen. There is a market structure shift. When price drop lower, closing with a full body candle below this level. Now, at this point, there is a change of character. You can also call it MSS, market structure shift, which either name that you're okay with. Now, why do we call, when price take this level, why do we call this a change of character? This market has been trending upward, which means it was giving us this thing, upward character, right? The character has been an upward trend. Now, when market drop lower, that means price is about to change character from going up to start going down. Now, at this point, that is where a downtrend come in. Now, automatically, this level becomes a lower low. So since we have a lower low, what are we expecting again? A lower high. We're expecting a lower high to get what? A new lower low. Another lower high. When price form a lower low and is ready to give a lower high, you have another lower high to this point to get another lower low. Another lower high to get another what? Lower low. Lower high to get another what? Lower low. So let's pause here. Now, what are the rules for this downtrend also? Since we have a market structure shift right here. Now, when a market is trending downward, it is not supposed to take out these lower highs that are formed, because these are the levels where price will come and give you an opportunity to create a new order and then put your stop loss above it to target the previous high for price to drop lower. So these lows are meant to be taken out to enable price form a new low. And again, when price take out this low to form a new low, automatically we have what we call break of structure right here, BOS. So we have another BOS right here. We have another BOS right here. Another BOS right here. Now, when price start doing this, it is simply trending downwards. All you have to do is find an opportunity to get in. And again, these lower lows right here, they are also called weak lows. Why are they weak? Because price is meant to take them out to form another one. Why this lower high on its selling trend are called strong highs. Why are they strong? Because this is the origin of the movement. This is where you place in your sell order and your stop loss. And a lot of people all over the world placing their sell order and their stop loss in order to push the market down. The same way when the market is trending upward, all these lows here becomes the strong lows. Why? Because you place in your sell here and your stop loss right here, and people all over the world to push the market up in order to take this high to form another high. So these highs become weak highs. So when price keep doing this, it's simply telling you buy. And if price keep doing this, it's simply telling you what? Sell. Now, let's talk about ranging trend. Now, let's say in a situation where the price now temporarily fall at a pausing phase, where the price is not going up, it's not going down. Now, at that point, when the price is not trending downward and is also not trending upward, at that point, we can simply say that price is what? Is ranging. You can see that price is not trending upward, it's not trending downward. What the price is just doing is just moving sideways. Now, at this point, price is not trending upward, it's not giving you higher highs, higher lows, it's not giving you what? Lower lows and lower highs. Now, at this point, all you have to do is identify those low levels and do what? Identify the high levels. Now, this high level right here is simply called equal highs. Right? And this low level where the price has been bouncing away from, you can also call them equal lows. Right? Price is giving multiple highs at the same level and is giving multiple lows at the same level, therefore creating what? Equal highs and equal lows. Now, what does this mean? Price is not trending upward, it's not trending downward, it's only accumulating money. It's only gaining, let's say price is doing what? Is gathering momentum to either break out for buy or break below to continue the sell. Now, at this point, what do? You pause because you can't risk your money in such thing. What you want to risk your money in is either price is trending downward or price is trending upward. So when price get to this phase, you pause. So whenever price is ready to push, let's assume price is ready to break out from the high. What will you see price do at that point? It's simple. Price will either break out from here, give a significant breakout from this level, right? Now, when that happened, it is simply confirmed that price has what? Has find a breakout or a breakthrough from this box. Now, what do? You simply wait for price to come and retest at this point, giving you a higher low, right? To give you the next what? Higher high. Or let's assume price want to continue the sell. All you will see is price break below this level, giving you a lower low. And what will you be expecting next? A lower high for you to come in and then push price downward. This is simply how price works. Now, if you follow all of these things I've given to you, you will make work easier for yourself. Now, with that being said about the trend, let's dive into the chart and do a little practical work. Let's check it out on the chart. Okay, so here on this chart right here, you can see clearly that price before this point, you can see clearly that price has been giving us, price dropped all the way to this point. Yeah, we have a lower low to this point. Price gave a lower high right here. What happened? We have a failed lower low right here. We have a failed lower low, which is simply called low. From here, we have a significant push all the way, causing a change of character right here. From here, we have a higher low. Here becomes a higher high, higher low, right? Higher high to this point, higher low to this point. We have a higher high to this point, right? And then we have a higher low, and price starts doing what? Ranging right here. You can see clearly, price start ranging right here. Push higher to this point, still drop lower to this level. Now from here, price tap into this higher low level. What are we expecting? Price to give us a new higher high. That's what we're expecting. So because price has tapped into this higher low level, I'll be looking for buy. So what do I do in this case? I'll wait for a confirmation that price is ready to push higher. Don't forget, there's a trend happening right here too. So now let's play price forward and see. Okay, good. Now I got a confirmation right here. This is what the confirmation. So what I want to do is, this is where people have placed in their order for a buy. This is where people have placed in their order for a buy, right? So I want to join them, put in my buy position right here and my stop loss below this level. So where am I targeting now? I'm targeting this high. Why am I targeting this high? Simple, because I'm following the structure. Higher high, higher low, higher high, higher low. Where's the next higher high? This is the next higher high right here. Where's the next higher low? You can see it right here. From here, we have a push all the way to this point, giving us another higher high. Now, from this point is where price start ranging. Price start ranging inside this area. Now, price drop lower to this higher low level I am seeing right here. So which means the market is still purely what? An uptrend. So what do I do in this case? I find opportunity, wait for a confirmation, which is this particular candle right here. In my next video, I'm going to talk about confirmation too, right? Confirmation, what you see before you take a trade. So now let's simply focus on the structure. Now, I start seeing market going up right here. So I want to take this and then let's see how it goes. And then boom, we hit take profit right here. You can see we hit take profit right here. Now moving forward again, we need price to completely close above this level so we can have our new break of structure right here. You can see clearly here that price did what? Close above this structure, giving us a structure break. That's break of structure, right? So now, moving forward, let me play price and see if the higher high is complete. Okay, good. Now, moving further, you can see that price has successfully given us what? A new higher high right here, right? And now this is the higher low that gave birth to this higher high. And then if you look closely again in here, you see that we still have a structure in here. So now let me focus on this structure, right? We have a higher high right here, and we have a higher low right here. We have another new higher high. So where am I looking for to take my trade? First, this is the last. This is the higher high, the previous higher high that was taken out to form another higher high right here. Now, note one thing for sure. Whenever you're looking out for opportunity, you should always have two plans. When I mean two plans, this higher high level is your first opportunity that you're looking to buy from. But in case price fail to use that high, because you still have from here, which is your higher low, the origin of this move to this point, you still have the opportunity when price come here for you to take another trade. So let me play the price forward and see if I'll get a confirmation right here to take my what? My first trade. Good. Now you see clearly that price failed to use here. That is why confirmation is very important. Price failed to use here, so I am out of here. So my next focus is now right here. I want to see a confirmation, after price getting here, I want to see a buying candle telling me that price is ready to move. Then I'll step in. Good. Now I can see this candle right here. This green candle has given me that confirmation that buyers are in already. So I want to go in after that candle close. Right here, my stop loss below right here. And where am I targeting? The previous high. And why am I targeting this previous high? Because price is meant to do what? Take out that high to form another high. So let's play price forward and see. Boom, you can see right here, we have another take profit hit right here. Now let's do one more again. Continuing further, this is our break of structure level right here. This is our structure break right here. So now, where am I targeting? Where am I targeting to get in from? This is our higher high that formed right here, and price taking it out. So I want to mark this level first as my first level of entry. And where is my second level of entry? You can guess it, guys. Here is my second level of entry right here. Now, mind you, this is a daily time frame. So the same thing that has been happening on this daily time frame is the same structure. The same structure you're seeing is the same structure you see on a lower time frame. Right. So if we are looking for market structure on a lower time frame, we'll still see market structure in this form on the lower time frame to find an entry. Right. So now let's play price forward and see if price is going to respect this level. Okay, good. I can see price tap on that level and give me this candle. So let me see the candle. Let me see how it closes. Good. Now I have a close to that level. I have a candle close right here. So now I want to go in right here. And then my stop loss below this level. So where am I targeting? Targeting the previous high, because I know price is going to do what? Take that high. Price is going to do what? Take that high to form another high. And you can as well do what? Give yourself like 1:2 risks to reward if this is too small for you. So let's make it 1:2 risks to reward. Good. Let's make it 1:2 risks to reward. So remember, I got in right here. Why? Because after price tapping this level right here, price gave me a candlestick confirmation that buyers are coming in, are already in, right? So I got in after this confirmation. So let's see. You can see clearly take profit hit. All you want to do is when price do what? Give you a breakout, which is a break of structure, you want to see price come back to this level, right? Giving you a confirmation, and then you step in. That's exactly what we are following right here. That's exactly what we are following right here. So I want to give you guys a test. Try it out and see, either for a buying structure or for a selling structure. Just try it out, back test us, and see how it plays out. When you spend your time understanding market structure, you are spending time to give the work, to make the work easier for yourself. When you understand market structure, you know the direction, you now know where to buy from. All you want to do is wait for that extra confirmation before you buy. Now, if you pay attention to this analysis that I did right here, after I spotted out the levels, after I spotted out the market direction, the next thing I want to spot out is the level where I want to buy from. Now, after price getting to the level I want to buy from, the next thing I want to spot out is a candle that gives me that confirmation, that tell me it is confirmed. After getting that confirmation, I go in. Now, whatever happens after that time, whether profit or loss, I'm okay. Why? Because this is market for you. So when market keep giving you this, it is simply trending upward. So moving further, where is our next level to target? Where is our break of structure level? This is our break of market structure level. And which is what? The area we are to target if price comes there. And that's our plan A. Where's our plan B? Our plan B is seated right here. So what do I do in this case? I will wait for price to come there. So let's play price forward and see. Good. You can see clearly that price, there was no confirmation, no candle, no buy candle closes. What happened? Price dropped lower. So this is no longer valid. So let's see right here if we get any confirmation. No confirmation yet. You can see. Good. Now you see what happened there. Price dropped lower to this point. You see? Price dropped below this higher low, right? And closing below it. Now at this point, something is about to happen. Something is about to happen right here. Now what's that thing? Price has given us what? A change of character. Price has given us what? A change of character right here, because price has taken this higher low that is not supposed to be taken and even closed below it with a full body candle. Now at this point, this becomes my what? My lower low right here. So I'm looking to go in on this trade. I'm looking to go in on this trade. So I need a confirmation before going in, right? Now price is heading towards this level. Now, this level that I am supposed to use as my buy opportunity automatically becomes my what? Sell opportunity. What I want to do is wait for price to come there and give me confirmation that is ready to sell. Then I will step in. So let's see. Good. We have price in that level now. Good. Now let's see if this candle is going to close with a selling candle for us to step in. You can see already price gave us that confirmation and then even more. Now, let's assume that this candle closed and then we stepped in right here. Now, where will be our stop loss? Just this high. Now, at this point, where are we targeting? Where are we targeting as our take profit level? Because this is a newly structured that just start forming, right? All you want to do is target that previous highs because price has already taken this particular higher low, which means automatically price is coming for all of these higher low. As price has violated this buying trend, price is coming to take all of it. So where am I targeting next? It's very simple. I'm targeting this level, this level right here. So I'm extending my take profit to this point. So let's play price forward and see whether we hit take profit or TP. Now, mind you, again, why did I get in from here? You can see clearly that price gave me a change of character, and then we have a push to this point with a confirmation, and then I entered. So let's play the price forward and see. Now you see we hit take profit on the trade. It's simply because we are following market structure. It is simply because we are following what? Market structure. There is no new thing on this other than following the direction of the market. When you follow the direction of the market, you're giving yourself a better way to trade. First thing first, know the market direction. And second thing, find an entry with a confirmation. Find what? An entry with a confirmation. So I would like you guys to try this out. Like I said, go and backtest. Go and try it out. Try market structure. try the levels I just spotted out for you. Try and see how it plays out, right? Backtest, practice, and then before you forward test. So if you enjoyed this video, I'd like you guys to subscribe and like, and also turn on the notification bell for more of these videos, right? And like, let me wrap it up with this. Everything you're learning right here won't make sense to you if you don't practice. Put in the work, practice, so you can get better in the process. Every successful trader you see out there, they do one thing to get better. They practice. They practice to understand the structure on how to do it so they can get better in the game. So you can only get better if you do the same, right? So thank you guys. This is the end of the class for today. I'll see you guys in my next class.